Hey guys, welcome to another weekly analysis by Analytics. So this week we are focusing on, there were not a lot of key developments this week, but this week we'll be undertaking a task of doing another technical analysis, a monthly technical analysis that we keep on doing. So month of July we did the month of August, and now we are back in the month of September. And we found out some very good patterns which I'll share with you closely. But let's have a catch up on what we did last week. So last week, as we stated, like BTC is range bound and it's between those levels of 10,000 and 9,000, and that was seen currently. As you can see, BTC was range bound and it has been consolidating in those regions. So it is a very good sign that the asset is consolidating, because it is making room for a big move or going down, because it corrected from 13,000 and now it's correcting in the levels of 9 to 10,000. That means there is a high percentage that it can go up or go down, but if it kept on falling then it would have decreased. But right now we know there's a stop, so it's a very positive sign for the bulls as well as for the bears, which I'll discuss later on in the video. So as we said, something about the S&P 500 also, like it's corrected from its all-time high and it's broken its previous resistance at 3700-ish levels, and it has broken that and is going south from there. So we anticipate that the S&P 500 could correct a little bit more, say about 5 to 10% from here, and then maybe a consolidation phase could be seen in that index before it takes an upright. Again, the 2600 to 2700 levels remain the levels which actually indicate whether the market is bearish or bullish. So that means, like, if it goes below 2600, that means the markets are bearish, and if it goes below, if it stays above 2700, it is bullish, and that those levels are a 11-year support level, that is from the last crash. So it's very important to maintain those levels. So let's give a catch up. So our forecast, as we said, BTC, we really concentrate a lot on our crypto assets, and and gold have reached an all-time high level of correlation. They've broken all records, and we'll analyze that quickly. Why, what it means for BTC and what it means for gold. The number of Bitcoin hodlers or holders, as we say in the community, have reached an all-time high as well. The maximum number of wallets. So there's about 3.5 million Bitcoin stacked. And mind you, 85% of all of Bitcoin has been mined. We have also, like as I said, we found some patterns. So we found an inclining wedge pattern, which is a bearish pattern in BTC, and we've also correlated our 725 and 99-day moving average as well, and both are indicating a bearish indicator. But we'll analyze that more depth in very shortly. And we've addressed a major issue. We haven't done a lot of analysis. A major issue that has come up, that has been the hacking of exchanges that has been taking place recently. An exchange, a European regulated exchange, was hacked for $6 million, about, I think, the $5.5 million, which is very sad. All right, so market review, as I said, what are the latest developments? So Bitcoin and gold have reached the all-time high correlation. So what does that mean? So that basically means that people are considering Bitcoin as a store of value, which is always a very good sign for BTC, because it's making its mark in the world of commodities. So it is always a very positive sign for the asset. The number of BTC holders are growing. So as per the data by Glassnode, as we saw, there are 3 million, 3 million wallets have come up recently in this year, which are holding more than zero point 0.1 BTC, which is always good, and which is indicating that people are accumulating at these levels. So they're not, selling, with the sell pressure or whatever it is. So they are accumulating at these levels. So the growth of BTC addresses can be correlated with the current monetary policies also taking place, with the Fed pricing, printing money going on, ECB printing money, the US election around the corner. So people are considering BTC as a store of value, as with gold. So as long they're investing $1 in gold, they're investing another dollar in BTC, which is always very good for the asset. And Kramer has bought gold. The world famous CNBC TV anchor, the host of Mad Men, I think Mad Money, sorry, not Mad Men, Mad Money, has bought BTC. Earlier, he used to call BTC Monopoly Money, and Anthony Pompalo, also known as POM, has basically convinced him to buy BTC, as he said, that he had a podcast with him, which is going to be aired tomorrow, I think so, on 14 September. And Kramer basically retweeted his tweet that he's bought for an undisclosed amount, and he's also openly stated that BTC could reach $1 million. So our technical analysis, so as we said, an inclining wedge pattern has been formed, and we basically mean that, that the resistance level, if the resistance is not broken as marked on the chart for Bitcoin, we could see it going down south to 9,000 levels. So inclining wedge is always a very, very, very bad pattern to be formed if you're looking for the bull sentiment, but a good pattern if you're looking for a bear sentiment. And mind you, this pattern only has a success rate of 60 to 70%. And the resistance at the top has to be broken. If the resistance is not broken, then it cannot basically, it'll give an upside breakout. The other one, which is another one, is this MA7, MA25 and MA99, that's the moving average, there's been a huge gap. So huge gap basically indicates a bearish outcome. In the historical past, as you can see, when last time there was a, kind of a, crossover, like, a huge gap happened with them, BTC crashed to 5,000. Similar scenario can be seen now, which is always very scary to be seen. And there are about 3 possible outcomes. So the first one is that the asset corrects to its support immediately, levels at 9,000 and consolidates and waits for all these moving averages to consolidate as well, so that they all come together. This is one of the best outcomes for the bulls. Second, the asset consolidates at the current level and wait for the moving averages to converge before making the next big move. This is also a very good thing if it can hold here, but we cannot see a strong support here. So a strong support is seen at those 9,000 levels. Third is that the asset goes in, there's a huge jump in volumes. The asset goes to 12,000 and it consolidates there. This is still a possibility because of the current economic conditions in place, the printing going on, the elections coming in place, all these play a huge factor, and the Bitcoin and gold correlation going to an all-time high level. So all these play a very crucial role. So if that happens, that's the best case for the bulls. So the asset goes to the top level, consolidates there, and then, basically waits for these moving averages to converge together. So our main question here, we got a lot of questions recently, and that is that should you trust an exchange with your money? Well, absolutely not, bluntly, because if you don't have the private key, you don't have the coin. That's a very simple question, answer to a very complicated question which people keep on asking me, that, oh, how safe are the exchanges? How's that? They're not safe. Even if you are the owner of BitGo, even if you have, BitGo custodian, the hot wallets, the cold wallets, there is nothing stopping the founders from running away with the money there. They can simply just say it's a hack. They can get, hackers to hack, and then, basically it's a very complicated thing. But you should not panic. There's always a solution. So one of the main thing is, that, recently, as you can see over in the light of events, recently, 5.4 million in BTC was stolen from a European exchange, 3.1 million again in a London-based exchange in July. About 200 million worth of BTC was stolen in the Asian market. So about 200 million of that. So what the user should do should see like how the exchange distributes the fund, like hot wallet, custody wallet. Do they have insurance on the wallet? But basically insurance is on the custody wallet. They are not on the hot wallet, so you never know how much you lose. The user should always check how often the exchange is being audited, how many bug bounty programs they have, and the user should only keep the amount that he or she wants to trade on the exchange. It should not treat the exchange as a wallet. Please don't treat the exchange as a wallet, because the exchange is not a bank. If you're staking your coins in the exchange is highly vulnerable to attacks because of the immediate withdrawal facilities that these exchanges have. So people literally lose tons of money because of that. So please be careful with that. Don't store your money on exchanges. So that's basically the thing. So we are still very bearish because of the patterns being formed, and our outlook is still very bearish, so 70% bearish. Hope you guys have a good week. Happy trading. Big events coming up. So please be stated. Please subscribe to us and watch us on Twitter. We keep on updating there. All right, guys. Cheers. Happy trading.